NZD, this is the weekly forecast that I'm going to cover technical analysis using smart money concepts. If you're new to the channel, please smash that subscribe button so you don't miss any valuable content, tips, and strategies on how to use smart money concepts to become a profitable trader in less time. Before we jump into the charts, if you are an intermediate trader, drop down intermediate. If you are a new trader, drop down I'm a new trader. If you are an advanced trader, just drop a comment below, I'm a new trader, because either or, I'm going to walk you through it and make it really simple. NZDCHF. Now, using smart money concepts. So the first thing you want to look at when you jump in a chart is look at a trend line. What is the chart is telling you? Well, we were on this bearish movement for a while, right? Since February 2017 up until the moment that we broke this lower high right here. Really good way to if you can't see the wicks, you want to always get rid of the wicks, is put the chart on a line and you'll see here there's no more wicks, right? So we broke this high right here. We broke this lower high. Now we have another lower low. This is the leg that we're looking at, right? And the lower high. And within that, this is where we are now here, right? We're covering this leg. So now we're on the 4 hours and we're going to analyze this on the 4 hours. 4 hours is a really sweet time frame to take a look at what's going on. We saw a big movement, right? We saw here a bullish, and now what we're having here is a flag. All right, high highs, lower lows, right? So we created this flag here, right, to the point that we mitigated this candle. Now this is a 4 hour candle. Now if you ever wondered if this is all happens because of luck, well, smart money concepts, once you understand smart money concepts, you understand what the banks did. The banks, if you look, it mitigated this 4 hour candle right to perfection. Look at this, right? 4 hour candle. And how do I know they did this? Because this is the last move. This red candle right here, it was the last move before this bullish run, right? Skyrocketed, right? Look at that. They broke this structure. It came down and mitigated this candle here, and then it went, went bananas, right? Now it mitigated this 4 hour candle, and now we're here, right? So this is where we are. And being here, it created, when we used this strategy called the banker strategy, what we did, it created here some accumulation. And then it broke out of the box, right? Created this accumulation. It broke out of the box, and now is mitigated this daily candle, all right? And that's what we are. Look at this. Again, if you think this happens by occasion, think again, my friends, my friend traders. Look at this. It mitigated this candle right here. This is a 4 hour candle. We call this a banker's candle. If you want to learn more about the banker's candles and how to get free trading, you can join our free live sessions Monday to Friday. Just click the link somewhere in the description of this video. You're going to learn exactly about this strategy. We don't use trend lines. We don't use moving averages, none. All I use is smart money concepts, which is about price action. Now, all right, this is what you want to pay attention really close, okay? Because you can be able to potentially catch a high probability trade with a lot of pips, all right? With low risk, high pips. All right, let's jump into it. All right, this is where we are. So I mitigated this daily candle. Now when you break down to the 4 hour, now before we get there, you understand we are in the extremes, right? This is an extreme because if you look at it, it created accumulation. This is all done on purpose, the banks, right? The banks would create this distribution here, and then it broke to the downside, right? Now, and then it mitigated this 4 hour candle I showed you earlier. Now it went again and it mitigated this daily candle that I just showed you. And now we're here. So now what happened again? Well, if you look closely, it mitigated this daily candle and it's creating this distribution. If you actually go down to the 1 hour, it created again a box, right? Another distribution. And what we saw here, so let's go back to the 4 hours. What we noticed here, it broke this structure. It actually broke 4 hour structure. And one of the things is very valuable when using smart money concepts is understanding breaker structure. And what it did is it left this really good candle up here. This 4 hour candle, I use this 4 hours, so I have a template for a 4 hour. And now what I'm expecting is basically 3 pushes, right? 1, 2, 3. And now it broke this 4 hour, right? It's right here, right? It broke. And now what I want to see is this a nice flag here, potential here to this candle. Now, if you want to do double mitigation, what you want to do is this might compress. It's going to potentially compress here, and then it's going to break this internal structure. It's going to break to the downside, and then to be sure that this is going to continue to the downside, so it breaks this structure, and then it's going to leave a candle up here, and then you want to catch this candle and to the downside and sell. If you take it out of this 4 hour, let's check here the risk reward. Again, just in case, just want to be clear, this is not financial advice. You need to trade your own risk. This is only for educational purposes, this video, okay? You know, do your own research. So if you did that, potentially, it would be nice if it comes all the way down here. But I would be safe to be on a safe side. This is what I'm looking to do. Anyway, this is only me. Banks are probably gonna at least come down here, okay, to get a lot of their orders. You get down to the 1 hour, you can shorten this your risk reward. And what I'm looking here is this 1 hour. You can do this 1 hour. So if you do the 1 hour, which is nice because it still has an engulfing candle right here, right? As this nice engulfing candle, took liquidity right here with this wick, right? Instead of using the 4 hour candle, which is the 4 hour or the 1 hour, they both have the engulfing candle, and they both took liquidity, so it makes this very strong high probability. So if you use the ratio risk to reward, it changes everything just by the 1 hour. All right. So if you do that, let's just say you want to get out here. I would get out around here. That's a 1 to 4 risk reward. So risk management is really important. Don't risk more than 1 to 2%. Trade at one risk. That is what I'm looking at to get in, possibly up here. Now, if you have some experience, you want to go down to the 15 minutes. You lower your risk, increase your profits. Totally up to you. So this is my analysis for the NZDCHF weekly forecast. If you want to learn more about our strategy, bankers strategy, so click the links away in the description. You get invited to the Facebook group. Then you're going to be on a waiting list to the Monday to Friday live sessions where you're going to learn. I'm going to show you step by step how to implement the banker strategy, how to look for high probability trades, and where to identify these banker candles with these accumulations and distributions, so you can lower your risk, increase your profits, so you can become a profitable trader in less time without spending tons of time in front of your chart or trying to learn indicators, M's and W's, head and shoulders, moving averages. None of that stuff. As you notice, I didn't use any of that to do my analysis. So if you like this video, please subscribe to the channel, and I look forward to seeing you on my next video.